All right. Good morning. What's going on, everybody? Give me a little shout out. Let's see who's in here, where you are from, maybe what you're drinking. I've got my usual here. You guys know by now, regulars here. Caribou is my favorite coffee. That's what I've got right now. Will, what's going on? Tim, the regulars are in here. Ron, what's going on? Um, Will's got his Kawana coffee. Tim's got his Green Mountain Sumatra. Ron from Jacksonville. We've got Dan in here from Arkansas. He's got Laird's Superfood Coffee. I've never heard of that, but it sounds super healthy. We've got Ubby from Houston. Uh, Jatine from Canada. We've got Jason from South Carolina drinking Dunkin'. I love Dunkin', the old school. Eric, what's going on, my buddy from Palm Desert? We've got Renea from Georgia has got some coffee. We've got Simon from Quebec, big Canadian contingent this morning. We've got Stephen from KC, straight up coffee. I usually add a little milk. I can't drink, no sugar, but I have to have a little something in it. Another from Canada here, Ontario, we've got, oh my gosh, I don't know. I don't think I can say your name. Oh, good, AKA Drew. Drew's in here. Kevin, what's going on? Salt Lake City. We got Aaron from Chicago, drank the Nespresso. We've got Simran from Ontario, uh, Dorothy Ann from New York, Amy from Overland Park, Kansas, drinking Starbucks. We got Tim from Crestview, Vasco from Stockholm, Sweden. All right, must be late over there right now. Felice, what's going on from Pennsylvania? Drinking Bustelo. That's is that the Brazilian coffee? If I have that right. Kuram, what's going on? We're gonna get together on Monday. Ted, what's going on? Prussia, Pennsylvania. World Market Italian Blend. We got Jim from Vancouver. Big turnout today. I don't know if I can call out everybody this morning. We got Dan from Raleigh. I'm going to go through this really quick now. We got Brian from one of my favorite cities, Vegas. We've got Kat. What's going on from Cali? Venki. What's going on? The Blue Mountain. All right. Good, good, good. Lots to talk about today. Let's get through it so we can get on with our weekend. Hopefully, everyone has a good weekend. It's been raining all week out here in San Diego, and woke up this morning and it's super sunny. So I think we're gonna have a lot to do this weekend. Let's get to it here. A few things I want to talk about. We're going to do our usual market analysis. You guys know we use a top-down approach. Even though we're not trading the market in a sense, we're trading specific stocks that we think can move. It's always good to know where the market is heading, and that helps you in various ways when you're trading stocks. So we're going to do our market analysis. We're going to go through. We've at least got over half of earnings season out of the way now, and a lot of the big stocks. So we're going to point out a few that are interesting as potential setups right now to trade this week, and that's a big part of why we're doing this, right? To get trades and get ready for the next week. So we've got some stocks we can potentially trade next week. We've got our big tech review. We'll see that there's two or three that I'm really interested in right now. We're already in over on Bulls on Wall Street about three of them right now: Google, Amazon, and Netflix. But the others are getting in. Some of the others are getting interesting. A really quick strategy session on mitigating risk and earnings. We talked a lot about this this past week over on Swing Group in Bulls on Wall Street. We're going to talk a little about China stocks, get into some of the China stocks that are really interesting now. Another area we should really be paying attention to right now. And guys, remember, if you're not a member, I recognize a lot of members in here, but if you're not a member, 14-day trial at Bulls on Wall Street, go to the swing trading tab or just join, obviously. And then upcoming, there's going to be a swing trading class I'm going to do in a few weeks here. I already kind of have it laid out, everything I want to talk about. But if there is something interesting that you want me to add into it, let me know and I'll see if I can work that in. So shoot me a message. You guys know my contact. If you don't, take a screenshot and I'll put it in the chat box here. There's my contact information. You can take a screenshot. SingJD1 at AOL.com. Easiest way to contact me. Of course, Bulls on Wall Street. My own site, Paul J. Singh. I'm posting to both of these next week, so check both of those out. And of course, Twitter and Instagram, and you can direct message me. And if you're on Discord, of course, you can message me there as well. All right, let's get to it. Market analysis here. Really interesting week. This is probably my favorite week so far during 2025. Most interesting week, I think, here because um, something kind of opposite what we would think is going to happen in the market played out. And that is, we got some maybe I wouldn't say bad news, but we got, well, maybe it could be bad news or scary news related to some of the things we're watching very closely in the market. Essentially what we're doing is paying attention to the charts, right? But we do look at the headlines, especially lately. I'm doing this more in the last, obviously post-pandemic, than I ever did before. I used to never pay attention to headlines. So it was just all about the charts, unless there was something really major. But it's become a very headline related market because um, the market is really paying attention to what they think the Fed's going to do. And now Trump is in office, and he's got breakneck news coming out every day. If we just pull up CNBC here, there are a ton. Like, I mean, the first big headline: unemployment spikes. So that's something to pay attention to. There's all this war stuff here. There's crypto stuff here. There's inflation and jobs, and just so many different headlines. OpenAI and all the DeepSeek stuff. So there's so many headlines right now to pay attention to. I think there's two main things we should be watching, and they're all related to inflation. We can kind of ignore everything else. And what we want to pay attention to essentially is what the Fed is going to do. And the market basically runs on what the Fed is doing, or what the Fed thinks, or what the market thinks the Fed is going to do in the future. So what are those things right now? And those are inflation numbers and tariffs. Those are the two things that are really going to impact inflation. So we got some, I spelled tariff wrong here. There we go. So the market gave us some big news this week. And that is, and yeah, guys, if you have any questions, you can post them in the chat here. Kirim, I'm not sure what you mean by PCR. It's probably something that should be on the tip of my head, but I can't think of it right now. So explain that a little further. All right, so right now, the biggest things related to inflation are the inflation-related numbers that come out. That's, jobs type stuff. That jobs headline we saw right there is very specific to DC, so I don't know if it impacts everything. But any jobs numbers that come out, and inflation type numbers like the CPI, the PPI, and all of that news came out this week, and it wasn't good. PPI was hotter than expected. So inflation continues to rise, and the Fed doesn't like that. There was an expectation that the yearly number was going to come in at 2.9. It came in at 3%. And I think the short-term number was 0.5%, and the expectation was 0.3%. So those were not good numbers for the CPI. That's the consumer index. And then the PPI, producers index, pretty much the same thing. And usually when that happens over the last few years, the market tanks. And then, later on it might recover, but in that short-term period, when we get the kind of numbers we got this week, the market doesn't like that, and it doesn't handle it well. On top of that, we got Trump and the tariff news, where he's getting even more aggressive on tariffs now. And if that goes through, that is not a good thing related to inflation. We can have opinions on whether that's a good thing or not, and total economics or political with other countries. But in terms of specifically inflation, that is not good. It will raise. Inflation will rise. So those are two things the market doesn't like, specifically because it knows the Fed is watching this, and this makes it less likely for rate cuts. And that's what the market continues to want to see. So it was very surprising then when we look at the market, and the market actually was very strong this week. So we have, I made it sound very dour, right, in terms of what happened with inflation and tariffs. Yet look what the market did. The market ended up testing the all-time high. This will say the market S&P 500. I kind of combine S&P 500, Qs, and IWM as my take on the overall market. So if we look at the Qs, also at all-time highs, and then if we look at small caps, while not at all-time highs, at least is off the lows here. And you would expect with that kind of news, especially small caps, to be really dipping here, and they did not. That is very surprising, and that's what I like to call a positive divergence. We have positive divergences when we look at, say, the price action and what we're seeing on our indicators. And I also look at news type positive or negative divergences. If news comes out that I think is positive, but the market or a stock reacts negatively, that would be a negative divergence. This is a positive divergence where when we look at these inflation numbers, logically, if I didn't know what was happening on the charts, I would think to myself, probably getting hit. And I look at it and it was not hit. This morning we had initially a gap down, and I think this one was the tariff. It's all getting, there's so much news coming out in the week. I'm forgetting which days were which, but I think this was the tariff day, if I'm right, or it might have been one of the inflation days. Initially gapped down and then recovered I think this might have been the tariff day, and then recovered very quickly. And then you can see what it did the next day. So this is telling us the market is, for some reason, is ignoring this bad news. And maybe there's something we don't know about. We're not economists. We don't have inside, and we don't have inside information, right? These guys do. So they know things we don't know. And that's why we look at the charts and kind of ignore kind of parsing the news, because we're always lagging on information, but we are not lagging on the charts. So the charts are telling us something very different than what our heads are telling us. So that's a very powerful signal whenever we see that. So I definitely think we should be bullish right now. So if we were to say why, I have no idea why the market reacted so well to the inflation numbers. The tariff is interesting because, for inflation, tariffs are not good. But the date was set at, I think it's April 2nd. So I think the market sees, first of all, we don't have to worry about it right now. So at least we have some certainty until April 2nd. And on top of that, it's starting to look and feel like all this tariff stuff is negotiating ploys and tactics. And the market might be thinking, okay, it's all negotiating. We saw with Mexico and Canada that they extended it and then they did some negotiations, and it looks like maybe things will be, okay in that regard, and that could be happening again. So maybe that's who knows, maybe that's why the market reacted well. It was not necessarily the news that was coming out of it. It was the fact that it was extended to April. But at any rate, whatever happened here, very strong indication in the market. So always look at these positive divergences when you see something. This could go for earnings too, like where maybe you see earnings on a stock and the stock missed on earnings, missed on revenues, and maybe even their guidance wasn't good. But then you see the stock doing really well. That's another way you see positive divergence, and vice versa, negative divergence. Good news on a stock, but the stock doesn't do anything or it pulls back. That would be a negative divergence. You have to ask yourself, why is this happening? So that being said, with our market analysis, I think all of this stuff leads to good news for us. And as we saw here, thwarted all of this news, and the market is at highs right now. So the charts are telling us something positive. Now, if we look at our market breadth indicators, let's just look at T2108 and RSP. Again, you guys know the drill. SPY is 500 of the biggest, best stocks, but not equally weighted. Apple and Tesla make up about 3% when they should only make up like 0.4%. And then the top 10 holdings right now make up about 33% of the S&P 500. So it's not really an accurate depiction of all 500 stocks. RSP will give us that because it equally weights every stock. And notice here, overall, it's lagging some because it had been really beaten down in December. Excuse me. But overall now, it's still lagging the market a little bit. So that's something to pay attention to. But T2108 is strong. And when we get into our industry analysis, we're going to see that a number of more speculative type industries are actually very strong right now. So that's why I have for market breadth, I'm going to say mixed right now. It's not super strong, but it's not really super weak either. I would say mixed, and maybe not something to be too concerned about right now. Um, so we don't have to really be cautious. And you guys know, like when I do my market analysis, I use this kind of uh, gives me my market bias going into the week, and I set it at kind of five spots. One, very bullish or super bullish, slightly bullish, then I have neutral or caution, slightly bearish or very bearish. And right now, I would say we're slightly bullish. But last week, I was slightly bullish to the cautious side. We'll say now we're slightly bullish more towards the very bullish side because of the stuff we just talked about. Okay, so we'll say mixed on market breadth. So essentially, that's telling us we don't really have to worry too much right now. At least it's not negative, or we're not seeing a negative divergence. Another interesting thing here is I saw this chart posted by Creative Planning, and it was interesting here that we'd kind of seen it. You know, we're looking at China, we're looking at some other ETFs, but it really laid this out that if we take USA versus the world, and honestly, this surprised me a little bit. And look at this chart here. This is where USA is right now. USA, not no, no, this is the world combined. USA is here. So look at all of these countries. USA is up 4% year to date, which is lagging essentially the rest of the world. Uh, Poland, I have no idea why here. Probably should look into it, but Poland's up 23%, Sweden's up 17%. Go down the list. We're focusing very much on China here, and China is up. Where is it here? 10% on the year. The world combined, if you combine all the countries here, up about 7% on the year, and we're up 4%. So that's something to pay attention to. There are other markets we can be looking at, and we have a lot of different, we have a bunch of China stocks we're looking at right now. We're looking at some Mexico stocks. We're looking at Brazil very closely in Brazil stocks as well. You can see Brazil's up 13%. And if you ever want to trade, say, the world versus USA, you think is going to beat, like if you think it's going to continue to beat and do what's going on right now, you can trade this ETF. It's VEU. There's some other ones as well. But VEU is essentially the world minus USA. So just something to think about. You can see, notice here, this ETF. Look at all, not only has it made a big run here, it had been lagging for a while, but notice how much volume has come in. That's telling us that the institutions, the big guys, are kind of starting to go towards these other areas. So that's something to watch, and you can always trade this ETF or trade stocks from different countries as well. All right. So USA versus the world. We're going to pay attention to that and see if we catch up here. Now, some of the industries we're paying attention to. The top here. This is all tech related industries, and then here we have some other industries we're watching very closely. Let's start with one of the most speculative. I always like to watch the ARK ETF. That's that Kathy Woods Innovation ETF. I like to look at this one because this is some of the most speculative stuff here in terms of what makes up this ETF. So when speculative tech stocks are moving, ARK is usually moving big, and whether it's up or down. And notice here this week, while SPY is testing highs, the Qs are testing highs. ARK is actually breaking to not all-time high. It's got an all-time high, out here in 2021, has bottomed out here, but is breaking this range that essentially is the high since 2022. So kind of the last 2, 3 years here, we have a breakout of a very important range that we've been watching closely because essentially breaks it out of this bottom formation, and now we're kind of set up as a potential continuation pattern. So it's very interesting that small caps we saw this week were lagging a little bit, but some speculative tech is really moving this week. And if we watched earnings this week, we saw a number of speculative tech plays, and essentially when I say speculative tech, that's more of the small cap and mid cap tech versus the big techs. So breaking out, so definitely an area we want to be watching. Um, Kind of leading here. I put these in order of their percentage gain over the last 2 weeks. So we have ARK, we have social media. Social media has been very strong. You can see here the chart's fantastic. Look at how strong it has been in 2025. So social media stocks definitely should be on our radar. I buy. So take a look first at retail. And this retail ETF is a really big grouping. Some of these retail stocks like have nothing to do with each other. So I break it down and do my own retail kind of breakdown. You can see here I have a list here called uh, specialty retail and apparel. Oftentimes you'll see these guys moving very differently than the overall retail sector, because overall retail has auto, has big box stores like Costco, Target, and all that, which is very different than some of the other more speculative retail type stores. And then also we have online retail, and that's a comparison I want to do here. Notice what we're seeing with retail here, but then if you look at online retail, I buy, you see much stronger. So definitely an area we want to be paying attention to, and that is online retail. Part of it is a lot of the China retail is doing very well as well. So online retail definitely should be paying attention to. Hack and Bug are both cybersecurity ETFs, and that is very strong right now as well. Arty is an AI and robotics ETF, and you can see here very strong. So we should definitely be paying attention to AI. And you know, when we see speculation doing really well, like something like ARK, Arty is going to be doing well as well. QTUM, quantum computing ETF, also has been strong. I like the way this is consolidating here and looks ready to break out. And we know we've been paying attention to some of those quantum computing stocks. And then notice communications is also very strong right now. Multimedia communication stocks. And then notice here, last on the list is semiconductors, SMH. And if we pull this up, you see it's kind of done nothing here. So it's very interesting that, you know, the thing that essentially was leading 2024, which was semiconductors, has done nothing in 2025, while all of these other more speculative kind of areas here in tech are doing really well. So that kind of tells us where we should be shifting towards, where 2024, it was very much semiconductors. Now we're kind of shifting towards these other kind of tech areas. So keep that in mind here. And of course, we'll watch to see if semiconductors pick up. NVIDIA is going to have earnings in a couple of weeks here. I think that could go a long way to setting a trend in semis. All right, so we have our kind of tech industries we're paying attention to now. And then we also have some other areas, Brazil and FXI. If we pull up EWZ, we can see here, Brazil essentially has been getting crushed for a while now. It's been, since 2021, has essentially been in a downtrend. Notice here the higher lows, the lower highs and the higher lows through here. We're getting a very strong bounce here, and we're getting some volume coming in on the bounce as well. So I don't know if we want to jump into Brazil right now, but definitely an area. And in 2025, it has been leading. You can see how strong it has been. So maybe it's an area we should be watching. But the area that I'm watching most closely is China. It's always a little tricky with China stocks. News can come out. The government can always do kind of shady stuff, and of course, we've got all the tariff news going on with China. But it's very interesting. I wouldn't have guessed with all this tariff news that China would be so strong right now, but it is. And you can see here on Friday a big gap up as well in FXI. So China, definitely an area we should be watching in a little after we get through these industries in a little bit here. We'll talk about some of the China stocks we're watching very closely for potential trades. Financials started this earnings season with very strong earnings and has just continued. You can see here where it gapped up and has just been continuing higher. It has been consolidating here, so I think some of these financial stocks could be in play. I'll be watching those this week as well. And you can always do the leveraged ETF FAS, which is going to give you some extra triple leverage here on XLF. So financials, we should be definitely watching. Gaming, BJK, has been very strong. You can see the big breakout here. A lot of this is because of DraftKings and Win both breaking out on Friday. And DraftKings is one of my favorite stocks right now. We had highlighted this as kind of a market cycle play, and we had the bottom formation, the cup and handle, and the breakout on Friday on earnings essentially broke out of that cup and handle pattern. So we'll be watching DraftKings very closely. I'd love to see a little bit of a pullback here, maybe a test of this gap for a potential entry there. And I'll get to you. I've got some questions here. I'll get to your questions here in a second, guys. All right. So we have gaming, and then metals, and we talked about retail as well. All areas we should be paying attention to right now. And of course, outside of our industries, just looking at stocks from earnings that have had nice breakdown or breakout setups. Many of you guys know I love trading stocks that are strong stocks, have had increasing revenues, revenue growth, increasing earnings growth, have nice charts, and then gap down on earnings due to an overreaction to maybe a miss because of high expectations or something in their guidance that causes the stock to gap down. So I have four candidates here that I'm watching very closely. One is ISRG. So first of all, you'll notice here as we pull this thing out, look at how strong this stock has been. Notice here that every time it has gapped down, it has recovered very quickly. And we had a gap down on earnings here, and now it has pulled into the gap. You essentially had a trigger here. This was on the 5th. And it's still kind of at that level. So I think it's still a decent entry right at the 9 EMA. So I do like ISRG a lot as a gap down reversal play. Roblox setting up as well. You can see here another one that has been very strong, broke out of this kind of box formation here back in October and has essentially been in a big momentum run. Gap down on earnings, tested the 50-day moving average, was very strong bounce off the 50-day moving average. Now you can see on Friday testing the 9 EMA. And if it breaks through the 9 EMA, it also pulls into the gap. And that's kind of our trigger for these gap down reversals is when they pull into the gap. So I would be watching this 67.50 range very closely. It's at 66.75 right now. That would be a trigger for an entry with a target up here at the open gap around 74. So I like Roblox a lot. These things have to trigger. We're not just going to enter them without that setup trigger. But SoFi and PayPal as well, and both are in similar industries. SoFi here, credit services. You can see here, gap down on earnings, but you can see how strong the stock has been. Gap down on earnings here. Um, Tested this kind of range in here, but pulled back. Now, very strong move on Friday, remounting the 50-day moving average. So I think we have a good potential entry here this week in SoFi. And then PayPal also gap down on earnings. Nothing to do with it right now, but I would watch it if it pulls into the gap here around 82 for a potential entry. So those are, excuse me, those are some of the gap down plays. Now some of the gap ups. Um, one industry I didn't put in our industry analysis there is travel, and travel has been very strong. Expedia, travel booking company, and you can see here going into earnings had been pulling back, but pulling back from a strong trend, and then broke out to highs. I think that's not an all-time high. 222 is the all-time high, but breaking this range here and setting up nicely. You can see how it's been consolidating. If it can break this range, maybe here around 205, I think we have a good entry in XPE, or sorry, EXPE. Pinterest and Roku. Here's Pinterest breakout pullback. We'll see if it finds support. It's kind of at the bottom of the range right now. If it's starting to show some strength here, I would look to enter. Or if it pulls back deeper and shows some strength at the 9 EMA, that would be a good potential entry as well. Spotify broke out here, and it actually had a trigger, this kind of high tight flag, when it broke here, and it's still holding that range. Even though the trigger was here on the 10th, I think it's still a decent entry where it is right now, and stop would be under the 9 EMA. App broke out here on Friday. We're going to watch how it plays out this week. If it tests the bottom of the range, I think we'd have a good entry. Dutch Brothers, we're drinking coffee this morning, and Dutch Brothers is pretty good, especially if you like sweet stuff or dessert type coffees. But the big breakout here is starting to consolidate. We'll watch this week to see how it consolidates for a potential entry. What else here? Roku, and we already talked about DraftKings. Roku here, the breakout on Friday. Nothing to do with it right now, but I like the fact that it broke out, and there's still some room here to about 109 for it to test its all-time high. And I think, no, well, not all-time high, but high since for a long time, since essentially 2022. So I would watch it this week for a pullback play for a potential entry there. So we've got a big list here of stocks from our Q1 breakouts, but these are the ones that I'm watching going into the week. Before we get into the big tech review, let's answer some of your questions here. Okay, Kiram. Yeah, I don't follow that indicator that you're looking at. It doesn't mean it's not valid. There's tons of good indicators. Oh, put call ratio. Yeah. Daniel Boeing looking like a possible flat top breakout in SPY. Yep, we'll be watching for a break to the highs. Then when it breaks to the highs, you want to see are these areas that we look to as market breadth indicators, are they supporting that breakout? All right. Deadmon's talking about the inflation numbers. Um, yeah, I don't really break this down and try to analyze this stuff. It really doesn't help you in trading. I just basically pay attention to the headlines and think about it, and then see what the how the market is reacting to that. But you make some good points here. Daniels, are you always finding new indexes, or do you have a go-to list? Uh, Kind of both. So I'm always adding and subtracting to this list right here, my ETF list. Right now, I've got about 83 different various ETFs in here. And according to what I'm seeing in the market, I'm always adding and subtracting to this. And there's some industries I don't really care about. I'll take them out, especially the fad industries. And once we know that AI is a trend and quantum computing is a trend, I'll add those. If they end up being fads, obviously I'll take them out. But yeah, I'm always adding, subtracting to this list. And of course, there's some that are just always there. Like XLF is always going to be in there. Semiconductors is always going to be in there. Software, IGV is always going to be in there. Middle is asking, can we enter into stocks when they are trending up, or should we wait for pullbacks? Both are valid. I always look at it as pullbacks are value plays. And when you get breaks of ranges, those are momentum plays in the sense that you're entering at a higher level, but you're expecting momentum. What you want to make sure is when you enter in an uptrend, that you're not entering at extended levels and levels that you will get bad risk reward. But it's basically either or on those. Just be careful when they're super extended. And there's various ways you can assess if something is very extended. If I start to notice the gap between price action and the 9 EMA is getting really wide, or the 50-day is getting really wide, that's usually the spot where you get pullbacks. So you don't want to be entering at those levels. And I'll also look at stochastics. Um, Tim is asking, what option do you use when you are trading through earnings? I have a lot of different options-based earning strategies. I will do straddles and strangles, some credit spreads as well, and occasionally just single calls and puts, but that's very rare. Karim is asking, can I get a list of your ETFs? Let me copy them here and put them in the chat. All right, you should have them in the chat right now. Okay, all right. Good questions, guys. Let's get to the rest of our agenda here today. Quick strategy set. Actually, let's do a quick big tech review. There's only about 7 stocks to look at right now. So we are over on Bulls on Wall Street. We're in Netflix right now, and we're at a spot. If I wasn't in it, I wouldn't be entering here. This is an example where Midal had asked about trending stocks. Like this is a trending stock too extended to be entering here. We entered on I think we anticipated the break of the range. We entered around 980, I believe it was, somewhere in there. And you can see it's getting extended now. We're at a spot where we're looking Monday or Tuesday. If it makes a little push here, we're going to take profits. Netflix should definitely be on watch, but I would not enter here. I'd want to see a pullback or a consolidation and then a break. Uh, Intel broke out. This one's interesting, but it's coming right into the 200-day moving average, so I wouldn't touch it right now. Amazon, we are in. It's actually close to our stop level under the 50-day moving average. But this is very common where they'll pull back here to the 50-day moving average and show some strength. So if I wasn't in Amazon right now and I was looking for a potential entry, I would want to see strength at the 50-day moving average. If we get like a bullish engulfing here or just a break of this range here in about 230, I think you'd have a really good entry for Amazon. Nvidia, we talked about this. It may have been in Stocks and Coffee as well, but we talked about this in the group chat over at Bulls. Um, this is the textbook gap down reversal. When it pulled into the gap, the trigger was right here, right around 129, 130. And you target the open gap fill here, which is about 142, and it's already up to about 138. And then it has earnings on the 26th. At this point, there's really nothing to do with it. This would have been the entry, but obviously we'll be watching to see if it gets back on trend post earnings. Disney is interesting, had a good earnings reaction last quarter. This candle was very interesting to me here because Disney had very good numbers, and they also had good guidance. But this is how the market reacted. So I'm kind of waiting and seeing on Disney. If it does recover here, it'll kind of thwart the news on this candle, and that would be very bullish. So if let's say Disney breaks this range, it's still a ways away, right around 114, 115. I'd be looking to enter Disney. We're in Google right now. This is a gap down reversal. If you're not in it now, if it remounts the 50-day moving average, I think that would be kind of a slam dunk entry. And then Apple. I haven't wanted to enter Apple in quite some time. It hasn't been on our focus list in quite some time. Essentially been in a downtrend since late December. But for the first time in a couple of months, it has made a higher low and also made a higher high. Notice here through this kind of mini downtrend, it was making lower low, lower low, lower low, lower high, lower high, lower high, and now it got its first. It got its first higher high here, and now it printed its first higher low. And now it's confirming by the remount of the 50-day moving average. So I really like Apple here. Had bad reaction to earnings, had that DOJ news, had bad China news, but it's coming back strong here. This is again that kind of positive divergence where we've heard a lot of bad news for Apple, but now look at what Apple is doing. It's essentially getting right back on trend above the 50-day moving average. All right, really quick strategy session. I just want to talk about earnings and mitigated risk. We'll use our app trade that we traded, but we didn't hold through earnings, unfortunately. So if we look at app here, we have a general rule that we do not hold through earnings. All right. So if we see here, we had entered app it was a combination of a continuation pattern. And then often you will see these strong stocks when you have earnings out like 2, 3, 4 weeks. You'll see a stock that has been trending and then it will run up into earnings. And that was the theory behind the play here. So you see, we got in on the test of the 50-day moving average, and then we got out up here just before earnings. And then you can see it gapped up here. We did not take advantage of the gap up, but it does illustrate a point that we have a general rule that we don't hold through earnings. Earnings is a crapshoot. You do not, even if you think you have an edge, you don't. You never know if a stock's going to gap up or down. It's amazing how many times you'll see a stock actually have good news and it gaps down, or actually has bad news and it gaps up related to something they say in guidance. So it really is gambling when you hold through earnings. Obviously, if you're holding longer term, whether it's you're investing or whether it's maybe a position trade rather than a swing trade that you plan to hold for 6 months or a year on a trend, you have to hold through earnings. But for our standard swings, we're holding them for a few days, a few weeks, maybe a month, maybe 2 months. We do not want to hold through earnings. The spot, there are some option strategies where you can hold through earnings. But for our standard trading, we generally don't want to hold through earnings unless we have mitigated our risk. And app was a good example of that. I didn't do it, but it does illustrate the point. So if you can see here, the entry here is around 330. And then before earnings, it's sitting at close to 400. So you have a good 60, 70 points of profit as you're holding it here, right? If you're entering at the 50-day moving average and exiting just or and you're sitting here just before earnings, and you're sitting on say 60 points, that essentially mitigates your risk for you, right? Even if it were to gap down big, you're probably not going to get hit very hard. So you can look at it and say, okay, I'm sitting on a 60-point gain right now. What is the history of the volatility of the stock? And you can go back. I like to go back like the last 8 to 10 earnings, and see how big did it gap up, how big did it gap down, and if it were to do that again, would I get hurt very much if I was holding through earnings? So if I'm holding it here and I'm up 60 points, and historically it tends to gap up or down 40 points. And then, the worst one was say 70 points. At that rate, I would lose 10 points. I wouldn't even hit my stop yet. You've mitigated your risk, and essentially you're trying to avoid big losses, right? Now, it would suck that you're giving up all that profit, and you can think about that is kind of a loss in a sense, losing your profit. But from where your entry was, you've really mitigated your risk. So in that spot, you can hold through earnings. There's nothing wrong with just taking your profit, and that's what we did. But it does still illustrate the point that you can hold through earnings, or you could also partial. I generally don't like to partial. Some people love to partial, but the thing with partialing is, um, you skew your risk reward, because when you do partial, now you only have a half size position. And when it does go up higher, you're only getting half profit, right? And for it to give you the full profit, it has to go up double what it was before. But with earnings, it can do that with the gap up. So I think it's okay with earnings. So you could partial in these spots, and that mitigates your risk even more, or just hold through knowing that you're protected by your profit that you already have. So we have still a bunch of stocks with earnings coming up, and if you're sitting on a profit on a stock that's coming up that has earnings coming up, you can think about that mitigated risk kind of play. All right, Chinese stocks. We talked about FXI. Two ETFs are yin and yang. Here's yin. This is the triple leveraged long ETF, and you can see here gapped up with China. So notice here, yin was up almost 3%, while FXI was up almost 1%. So you can see it's 3 times leveraged. So if FXI is up 1%, yen will probably be up around 3%. But vice versa, if FXI is down 1%, uh, yen is going to be down 3%. So you have to take that into account. But if you want the added leverage and you want to be protected a little bit, because when you're trading China stocks, crazy stuff can happen. And if you want to protect yourself, and instead of trading a stock, just trading the entire index so you're a little more protected, you can trade FXI. And then if you want the added leverage like stocks can give you, the type of move some of the momentum stocks can give you, you can trade yen. And you can see yen is up almost 100% from its low in 2025. Well, FXI is probably up much less than that. So yen is a possibility. And then if yen is getting, or if China is getting super extended, and say you wanted to go bearish on it for like a short-term kind of short setup, instead of shorting a stock, you can take yang, which is bearish. And notice here it's the exact opposite. While yen has been going up, yang has been going down. And you can trade this as a way to go long but be bearish. So you could trade yang if you want to essentially short China, which we don't want to do right now. But if you ever do want to, you can trade yang. All right, let's quickly look at the stocks, and then I'll answer your questions, and we can get out of here. Baba is one of my favorites right now. We posted this in the chat, and I think I might have posted this on Twitter too, or X. Um, Fantastic bottom formation. Had topped out here in 2020, had been in a downtrend until 2022, and essentially has been range bound 2.5 years here. Notice here, nice bottom formation. And throughout the bottom formation, whenever you're looking at these bottom formations, take a look at accumulation patterns, and are the institutions buying it up? And notice here all of this big green throughout the bottom formation. That's a very strong signal. And then last week on Friday, we finally got the break of the range here. So very strong breakout on Friday, breaks this entire 2.5 year range, 2 year range, and looks ready to now get into continuation pattern mode. And you can see how much room there is to its old highs. So I like Baba a lot right now. I may enter it next week, but I think this Baba is going to be a stock will be trading throughout 2025. Let's pull up some other ones here. Here's Billy, an internet and gaming stock. You can see here had broke out, had pulled back, and now is breaking this kind of downtrend here. Nice breakout, a little extended on this breakout, but definitely on watch. JD, which is a retail stock. A number of the retail stocks are looking good. This one's not too extended either. I think it can be entered right now. NTES is one of the big China stocks. Is not in media, multimedia, has not really done much. But I would watch this for a potential sympathy play, especially if it has good earnings and breaks this range. So I wouldn't enter this now, but watch earnings. And if it has strong earnings, I think this one could really start to run. Baidu, I'm a little surprised because oftentimes this one will keep pace with Baba. But you can see here, while it's lagged a little bit, it has formed this kind of W pattern, remounted the two-week average, and has some good volume coming into it. All right, and two more. We'll go over SE XPEV. XPEV is electric cars, and you can see here strong pattern here. I think it's a good entry at the 9 EMA. What was the other one? SE. I've liked SE a lot. I think SE is a retail stock. Yeah, retail stock. A little extended now, but I would watch for a pullback in SE, and it has earnings in early March. So keep an eye on these stocks. There's a few more in here. KWeb is a financials ETF, actually, and it's looking very strong as well. So if you guys have any more questions, let me know. But we'll keep an eye on China stocks. Remember, guys, 14-day trial at Bulls on Wall Street swing trading. I'll put this in the chat if you guys need that. And of course, you can join as well. And then remember, there's going to be a kind of a mini swing class, a 2 to 3 day class coming up. And if there's any topics you think I should, it's pretty laid out already in terms of what I want to talk about. But if there are some topics I think you guys want me to hit, I'll hit those as well in the class. All right, let's see what if you guys have any more questions. Karim is asking about Murphy Oil. I do like energy right now. Let's take a look at Murphy Oil. I'm forgetting the ticker now. There we go, MUR. So I can see the theory here might be this one's beaten down and some other ones have already moved. You could definitely profit off this one, but I would say go with the ones that have already shown more strength. So I think there are better choices. If we pull up some of the energy stocks I'm watching here, there's a big list here. I'll put this in the chat so you can kind of analyze some of these. And we're going to meet up soon, Karam, so I can go over these with you. But I'll put the list in here. Let me get that again. Middle's asking, is it recommended to take some positions in BABA next week? Well, I'm not going to make a recommendation. I'm not your financial advisor. I will just say I do like BABA right now. Aaron had been on top of China stocks in January and held some small positions. That's fantastic. You're obviously doing really well in those. Tom just exited BK. Do we see another entry? Bank of New York. I like financials right now. We talked about that. So definitely a good stock to be trading. Pulled back and has now broke high. I think it's as long as it holds this high, I think you have a good setup. I would use a little bit of a loose stop just because it's overall extended. And you can when stocks are extended, you can get some volatility and you don't want to be chopped out. So I'd say another entry would be okay on the break of the high here. Just use a little bit of a looser stop. Jimmy points to refiners. Yeah. So we talk about energy, but if we look at energy, there are a lot of different spots within energy. They tend to move together, but sometimes you will see relative strength in different areas. You can see TC2000 has it broken down to gas and equipment, integrated, refining, exploration and production. I think that's E&P is exploration, and so on. So sometimes it is worthwhile breaking it down even further. Aaron likes AMD as a value play. Yeah, the chart's not great right now. It's still in a downtrend. Um, so maybe you see value here. The question is, does it continue to trend? It was a good value here. It was actually a good value here, right? It keeps becoming a better kind of value. So I would say if you do enter here, use a bit of a loose stop, maybe under the low here. Deadmon, good question here. So, part of the, when we were doing our market analysis, I mentioned that doesn't necessarily mean we're trading the market, like we're trading SPY or trading the Qs. We're mostly trading stocks, right? But one of the things your market analysis does is it tells you when to get super aggressive and when to be more conservative, right? And that is part of being a good swing trader. A lot of swing traders just focus on, the setups they're seeing, um, and stock picking. But one of the keys to being a good swing trader is really knowing when to push it and when to step back, and sometimes when to be completely in cash, right? And then also knowing how to balance longs versus shorts, and your market analysis will help you with that. So I would say right now is a spot in terms of the question was about what percentage of portfolio. And there are times when you should be at 0%. Sometimes you should be at 20% of your portfolio, 50%, sometimes 100%, sometimes even a little bit on margin, maybe 125 or 150%, as long as you're managing your risk well in those spots. So I would say right now, definitely to be, this is a spot where you want to be above 50%. And then it's kind of a choice between your risk tolerances of what percentage you want to be at. Arun is asking about MSTR. It's interesting that all of these blockchain related stocks were moving together, and now they've kind of diverged. Hood broke out and has been on fire, you can see here, whereas Coinbase has pulled back and lagged a little bit after a nice breakout to highs. And then MSTR, which is kind of software backbone play for blockchain, has been kind of doing nothing for a while, had pulled back and now has been consolidating. I would say watch the 50-day moving average very closely. If you can get up over the 50-day moving average, that could be the trigger. And it's already had earnings, so we don't have to worry about earnings as well. And if you wanted to anticipate the break and maybe use a loose stop under the range where and not risk too much, that might be okay. And then you could add on a remount of the 50-day moving average if that happens. All right, guys. And I guess I always forget this, that it's difficult I guess they don't let you copy the chat, which seems weird. Um, if you want my list here, I can post it. Those of you who are swing members in the Discord, I can post it there. Just ask in the chat. And those of you who are not, just email me and I can send you, I'll just cut and paste it into the email. So here's my email, singjd1@aol.com. Just message me and just say you want my ETF list, and I'll send that out to you. All right, guys, I think that's it. Remember, again, 14-day trial and swing talk class coming up. I really want to know if there's some topics you want me to discuss, and if I'm not discussing them, there might be some stuff that I can help you guys out with. All right, guys, we will do this again hopefully next week. I'm trying to do more of these stocks and coffees when I'm free on Saturday mornings. Otherwise, those of you guys who are swing members, I will see you guys in the chat and with the reports on Monday. Talk soon.